Derek, thanks a lot. Let's revisit that old debate from Money Tuesday. How good are your chances striking it rich with the lottery versus small, long-time investments in stocks? Well, Stewart Welch is with the Welch Group. He answers your questions today, and that's one of those questions that was thrown out at you recently, right?
No, we had a reader that said, all this hoobah about the $600 million lottery, and is this really a good idea?
Yeah.
So it's not a very good idea.
And for what it's worth, let's say for the people who won, it was a very good idea.
Well,
for the rest of us, maybe not.
Well, you had it really defines a loser's game. There's 150 million people that spent a record $1.5 billion so that 3 people could split $460 million, and that was $460 million before the state and federal taxes. So it's really not a very good idea.
Okay, so it's not a good idea. A lot of folks will say, oh, if a buck here or there from time to time. Here's the question, though, and you've heard this before, and I want to follow up with this, because a lot of times folks will say, betting on the stock market, very much along the same ideas. It's kind of a little bit of a gambling notion in their mind too. How do you respond when folks hear that? Here's your chance to change opinions.
Well, you've got think of it as 150 million to 1 versus stocks you're investing in companies, and the people that are running those companies, they only do really well financially if the company does really well. So they have all the incentives to grow the company. And over the long period of time, if you look at long-term history, the stock market's actually gained somewhere between 8 and 12%. And so the stock market's a lot surer bet than the lottery.
You're not going to be a Mega Millions winner, but you are going to have some money at the end.
Well, you might have bought Apple, right? Or you might have bought Berkshire Hathaway. That's right.
Unless you bought Apple or Warren Buffett's operation. Hey, let's talk a little bit about, you talked recently about power of attorney, making decisions as you get older. Let's talk a little bit about this. You've had some follow-up questions on that as well.
We actually had a reader that, a viewer that called in with a question, and basically their question was, how specific does the power of attorney have to be? And we had a situation where a husband was filing for a required minimum distribution on a wife who's incompetent. And this is when you turn 70, you have to start taking money from your retirement account. And the financial institution would not accept the power of attorney. And the reason they wouldn't, because it didn't specifically allow for required minimum distributions. So Alabama's passed a new law. It came in effect January of this year that forces the institutions to accept that power of attorney. And I think the lesson for everybody out there is this is probably a topic that you'll want to revisit with your attorney. Okay,
yeah, you want to talk about it. It kind of goes into that whole estate planning conversation that every family should have. Stewart, it's good to see you. Thanks so much. More to come on Good Day with JJ next.